You're waiting. I know you are, because almost everyone who owns property in Toronto right now is waiting for prices to fully recover before selling, waiting for prices to drop before buying. And here's a problem with that plan. In June, 6,770 homes sold in the GTA. That's up 9.4% from last year. New listings, they're down 13%. Active inventory, the total pool of homes available for buyers to choose from, down 13.5%. That's not a recovery market. That's a tightening market where prices just haven't caught up yet. And the people who figure that out before the headlines do are the ones who look smart in hindsight, because hindsight is 2020. I'm Maurice Anderson, a Toronto realtor, 12 years in this market, a property manager that has managed over 550 plus stores in the GTHA. I make these videos to give you the real numbers before they become common knowledge. So let's get into it. So the good news is the supply, and there's a story with that. So on the screen, you're going to see a year-over-year summary table and then a home type table. Let me start with the supply picture, because this is the engine behind everything else that's happening in the market right now. In June, 17,282 new listings came to market. That sounds like a lot until you realize it's nearly 13% fewer than what came to market last year. Everything available for buyers to choose from across the GTA sits at 27,329 homes. That's down 13.5% year over year. More buyers are coming to the market. Fewer homes are available for them to choose from. On a month-over-month basis, sales in June was actually up from May, but listings were down from May. This market has been tightening consistently through the entire spring season, not just a one-month trend. And here's something that doesn't get enough attention. For the first half of 2026 as a whole, January through June, sales across the GTA are running higher than the first half of 2025, and new listings are down substantially over that same period. This isn't noise, this is a pattern. Now let me break down what actually sold in June, because the story is different depending on what you are owning right now. Detached home sales have been up 9.1% year over year, 3,256 sales at an average price of $1,364,204. That price is down 2% from last year. When I say only 2%, that's relative to where we were 18 months ago. Detached is the segment closest to full price recovery. When we're talking about semi-detached properties, there were 617 sales, up 3% to an average price of $1,038,973. That cost is down 4.6%. Townhome sales were up 4.3%. There's 1,082 sales at an average price of $844,579, and that is down 3.1%. Condos, they're the standout. There's 1,714 condo apartment sales. That was up in June, 14.3% year over year. Let that sink in. Condo sale volumes jumped double digits in a single month. The average price is down $630,688. That's a 9.5% decrease from last year. That price gap is exactly what's pulling buyers back into the segment. Buyers are returning to every part of this market, and they're doing it fast. So here's the question that I want to drop on you, because it's the one that I get every single week right now. If sales are up nearly 10% and listings are down nearly 13%, and the market is clearly tightening, why are prices still down year over year? And it's a fair question, and I want to give you the real answer, not the spin. The average selling price in June was $1,058,658, down 3.9% from June 2025. The MLS Home Price Index, which controls for what is actually selling, so you get a cleaner read, that was down 5.4% year over year. So yes, prices are still below where they were 12 months ago. If you bought near to the 2022 peak, I'm not going to tell you those numbers feel good. They don't. And here's the honest context behind that. CMHC the Canadian Mortgage and Housing Corporation. That's the federal agency that tracks this stuff. They put out their housing market outlook, and they're projecting that elevated inventory will continue to keep price growth muted through 2026. Prices are expected to pick up in 2027 and 2028. But right now in this year, prices are projected to decline slightly before recovering. I'm telling you that because I think you deserve the complete picture, not just the parts that make the market sound better than it really is. But here's what both the TRREB numbers and the CMHC outlook agree on. The Greater Toronto Area is projected to lead Ontario's recovery. Their exact words, not mine. The GTA will lead this growth due to strong demand and not a diversified economy. Not Hamilton, not Ottawa, not Southwestern Ontario, the GTA. And here's something that doesn't get enough attention. The job losses we've seen in Ontario are almost entirely concentrated in trade dependent industries, manufacturing, export driven sectors, the broader service economy, the sector most GTA homeowners and buyers work in, has actually been growing. Labor market weakness is real, but it's targeted. It's not broad based. And that matters for where housing demand is going to come from. The reason prices haven't fully bounced back yet, even as sales surge comes down to a lag, when supply tightens and demand picks up, it takes a few months before that pressure shows up in the price. We saw it in 2020. We saw it again in 2021. The sales volume always moves first. The prices follow. And right now, April to June, the rate of year over year price decline has been shrinking every single month. That direction matters. So here's what I want you to actually think about, not just nod along to. If you're a seller, is it smarter to list now while inventory is low, prices are still recovering, and buyers are more motivated than they've been in over a year? Or do you wait for prices to fully come back, which means waiting until buyers have more homes to choose from, less urgency, and more negotiating power than they have today? If you're a buyer, do you buy now at prices still below last year's level with the ability to negotiate? Or do you wait until prices recover and then pay more, compete harder, and explain to yourself why you didn't move when the market gave you the opening? There's no universally right answer. It depends on your situation. What are your circumstances? But I want you to actually sit with it because the decisions people make in the next 60 to 90 days in this market are going to matter a lot more than most people realize right now. Here's the forward looking picture. And this is where things get interesting because I've got two independent sources saying the same thing. And when that happens in real estate, I pay attention. And so should you. TRREB, the Toronto Regional Real Estate Board, which tracks every single transaction in this market, released their June data on July 3rd. Their president said they're expecting accelerating transactions and more competition between buyers in the last 6 months of 2026, and that this will ultimately satisfy pent-up demand and result in renewed price growth. And CMHC, Canada's Mortgage and Housing Corporation, which is the federal agency, not a real estate board, published their housing market outlook for Ontario. They're projecting sales to start rising in Ontario's major markets in 2026 and continue trending upward into 2028. And specifically, they say the GTA, the Greater Toronto Area, is projected to lead this growth due to strong demand and a diversified economy. That's two independent organizations, a federal agency, and a local real estate board with the same conclusion. The GTA leads the recovery and sales start to climb. So let me unpack what that really means and why CMHC gave us those reasons. CMHC laid out exactly what's driving more buyers into the market right now. First, improving affordability, which means income growth is starting to outpace home prices, and recent changes to mortgage insurance rules, specifically extending amortizations, are making it easier for more buyers to qualify and enter the market. That's a structural change, not just a rate story. Second, household formation. Despite slower population growth, pent-up demand means households that were previously priced out are now starting to form and look for housing. Higher inventory and lower prices are giving them the opening they didn't have in 2021 and 2022. And third, first time buyers. CMHC specifically called this category of buyers. When first time home buyers enter the market, they actually free up rental space, which helps out the rental market. But more importantly for sellers, a first time buyer purchasing a condo or a starter home creates a move up buyer. That person can now sell and upsize. It creates a chain reaction through the entire market. More first time buyers means more activity across every price point. For sellers, the window you're in right now is one of the most underrated selling environments I've seen in years. Inventory is low. Your competition as a seller is low. Buyers who are active right now are serious. They're not browsing, they're deciding. Days on the market sits at 29 days. Sales to list ratio is 98%. Properly priced homes are trading very closely to asking price. In certain pockets, we're still seeing multiple offers. If you wait for prices to fully recover before you list, you'll be listing in a market where buyers have more options, more time, and less urgency. The best time to sell is never when everyone else agrees it's hot. It's when inventory is low and buyers have fewer choices. That's the market you're sitting in right now. Now, for buyers, you're still negotiating. At 98% sale to list ratio, you can come in below asking and expect a real conversation. At 29 days on market, you're not losing a home if you take a few days to think about it. But I'll be straight with you, that window is narrowing. Every month, the inventory picture gets tighter, and with extended amortizations now available, the barrier to entry is lower than it was 12 months ago. If TRREB and CMHC are both right about the second half acceleration, and the June data says they are, the buyers who act in the next 60 to 90 days are going to look back on this as the right call. Let me give you one more angle that most realtors can't offer, because most realtors haven't managed over 550 doors across mid-rise and high-rise buildings in the city. CMHC flagged something important in their outlook that I'm already seeing on the ground. Increasing rental supply and a smaller temporary resident population are pushing vacancy rates higher and slowing rent growth on two-bedroom units. If you're an investor holding a rental property, that's a real headwind on your cash flow side, which makes the question of when to exit or whether to reposition your portfolio more urgent than it was a year ago. On the condo side specifically, sales volume was up 14.3% in June. Buyers are returning, but the average price is still down 9.5%. That gap between volume recovery and price recovery is the opportunity. The window where you can sell into motivated buyer demand before prices fully rebound. That window is right now. Is now a good time to sell? That's the question that I want you to ask yourself. Sales are up 9.4%. Supply is down 13.5%. Prices recovering month over month. TRREB forecasting second half acceleration. CMHC projecting the GTA to lead Ontario's recovery through 2028. Extended amortizations lowering the bar for first-time buyers. A chain reaction of move-up demand coming. And right now, a low inventory, motivated buyers, environment that sellers haven't seen in years. If you've been waiting for a signal, you just got two of them. If you want to know exactly what your home is worth in this market, or if you want to talk through whether now makes sense for your specific situation, I do a free, no pressure home evaluation. We look at your property, your equity, your next move, and I give you the honest picture. No listing agreement required, no pitch at the end, just real numbers, a real conversation. The link to book is in the description below. My name is Maurice Anderson. I put this market update out every single month, so you always have an accurate read on what's actually happening, not what the headlines want you to think is happening. Hit the subscribe so you don't miss the next one. And if you know someone sitting on a property decision right now, send them this video. It might be exactly what they need to hear. I'll see you in the next one. And remember, in this market, people who act on data tend to come out ahead of the ones who wait for certainty. Talk soon.